Is the Denver real estate market crashing like it did in 2008, or is something else happening? I'm going to answer that question right now with verified data. Not opinion, not headlines, not fear. Stick with me for the next 8 minutes and you will know exactly what the numbers say and exactly what to do about it. Hey, I'm Jeremy Kane with Jeremy Kane Homes at eXp. I work with buyers and sellers across Denver Metro and Northern Colorado every day. And I can tell you, this is the question I'm getting more than any other right now. Is this market about to fall apart? Should I wait to buy? Should I pull my listing? People are Googling this constantly, and they're getting two very different answers depending on which headline they land on. So today, we're going to cut through that. Here's what we're covering. First, we're going to talk about the cooling market. What does that actually mean? Versus crashing, and what that actually means. Because those words are not interchangeable, and the confusion is costing people real decisions. Then we're going to look at the national picture from the most recent data available, then Colorado specifically. Then we're going to zoom all the way into the Denver metro area because that's where you live. That's where you're buying or selling, and the statewide number doesn't tell you the story. And then we're going to deliver the verdict and tell you what you to actually do with all of it. Let's go. Before we look at a single data point, we need to agree on what we're actually talking about. Because cooling and crashing are being used interchangeably right now, and they are not the same thing, not even close. Let me define both of them clearly so we have that shared vocabulary for the rest of this video. Cooling is normalization of pace and price growth. It means the market is decelerating. Prices are rising more slowly or making modest corrections. Homes are sitting on the market a little longer than they have before, and buyers have more options. Multiple offer situations are less frequent. Cooling is what happens when a market that was running too hot starts returning to historical norms. It's a natural part of the cycle. Crashing is something fundamentally different. Crashing means sustained price collapse, double-digit percentage drops over an extended period of time, driven by forced selling, widespread financial distress, foreclosure waves, and a collapse of buyer demand. Crashing has a catalyst. In 2008, that catalyst was subprime mortgage fraud, over-leveraged financial instruments, and millions of borrowers who never should have qualified for the loans they actually had. The result was a structural unraveling of the entire credit system. That is crashing. These two things are not the same. They are different phenomena. And once you understand that distinction, you will read every market headline a little bit differently. Keep that two-column framework in your head as we go through the data. Okay, with that framework in place, let's start at the national level and work our way in. According to Homes.com and CoStar Group reported from May 2026, published on June 16, 2026, the U.S. national median home sale price was $395,000. That is up 1.8% year over year from May 2025. So nationally, prices are still going up modestly, but up. Now, home sales were slightly below year-ago levels, and active listings were higher than a year ago. So what does that picture tell us? More supply, slightly fewer sales, prices still nudging upward. That is the textbook definition of market moving toward balance, not a market in free fall. The report also broke down by property type. Single-family home prices rose 1.5% year over year, while condo prices edged slightly lower. I want you to hold that national number, 395,000, up 1.8% as our baseline. Because when we look at Colorado next, we're going to see that Colorado is running below that national trend. And understanding the gap between national and state is where the real story starts. Now let's zoom into Colorado, and that's where it gets more interesting. And where I want to be careful to read the numbers accurately, because there's a nuance here that most headlines completely miss. Per a Redfin report cited by the Fort Collins Coloradoan in June of 26, Colorado statewide home prices fell 2.1% year over year in April to $548,191. Let me say that again so it lands. The average Colorado home price in April 2026 was $548,191, down 2.1% from a year earlier. So nationally, prices are up 1.8%. Colorado, it's down 2.1%. That gap matters. Colorado is underperforming the national trend, but here's the number that almost no one is talking about, and it is the most important data point in this entire conversation. More homes sold in Colorado than a year ago. Sales volume was up 3.2% year over year, 7,630 transactions statewide. Let that sink in. Prices are softer and more people are buying. That is not what a crashing market looks like. A crashing market has volume collapsing because buyers disappear. Here, buyers are still active. They just have more leverage than they used to. The other metric worth noting, days on market came in at 47 days, up 2% year over year. Homes are sitting a little longer. Sellers have to be patient and strategic, but transactions are happening. So what's that mean for you? Colorado's market is cooling. Prices are making a modest downward correction from elevated levels. Buyers have more time and more choices. Sellers who price correctly are still closing. That is what cooling looks like. And I want to say explicitly what it does not mean. It does not mean prices are in a free fall. It does not mean Colorado real estate is a bad investment. And it does not mean you should wait indefinitely on the sidelines hoping for a crash that data simply does not support. All right, this is the section that most matters to you if you are actually buying or selling in this market, because statewide data tells you part of the story, but it doesn't tell you the story of Denver Metro and Northern Colorado are their own submarkets with their own dynamics. And here are my on-the-ground perspectives. Let's start with closed median price. The month-over-month value was $615,000 with an average value with a rolling 12-month value of $595,000. That matters, right? We are down a bit, but we're talking median here, right? Let's talk days in MLS. The 12-month rolling average was 28. Currently, the month-over-month data is 15 per median. That's a big difference, meaning that some of the homes that are going on the market that are priced correctly, that are turnkey, are actually flying off the shelves, while some of the longer days on market that are not priced correctly, not move-in ready, are dragging even that median up. But the average is obviously far greater than the median, so that tells you there's an actual divide in that situation. That's something that we have to consider. The truth is that we have to understand as people in the real estate industry that we have gotten so hyper-focused on all this data that I'm talking to you about. The American dream once was about planning routes, having some stability in your monthly costs, having a place to raise a family. But at some point, we forgot about all of that and just got hyper-focused on the exact numbers. If we can pull some of that back out, yes, buying a home, no matter what the market is still doable, because it's honestly about more than just the exact data. And as we continue here, you have to understand that every single market is different. It changes by the time you get pre-approved. We could have higher interest rates and so on. So those stats that I just gave you are from the Denver Metro Association of Realtors average based on an MLS search. So you have to see that all of the different markets are a little bit different. We have to understand that Fort Collins, Loveland, Greeley, Windsor, and Northern Colorado are absolutely part of the story. They still are pushed by the relocation and everything that's going on there. Bidding wars are happening in some places, and prices are still moving up in some areas. Denver Metro has neighborhoods that are still seeing strong demand, particularly in price ranges and locations with limited supply. In Northern Colorado, Fort Collins, Loveland, and Windsor continue to attract those same relocation buyers from the Front Range and out of state, which creates its own demand layer that doesn't always track the state average. What the statewide cooling trend means locally is that buyers in the Denver Metro and Northern Colorado area have more options than they've had in the 3 or 4 years prior. Days on market are longer, which means you have more time to do proper due diligence. And in this segment of the market where inventory is built up, there's a genuine negotiating room on price, concessions, closing costs. That is a meaningful difference environment from 2021 and 2022, when buyers were waiving inspections and writing love letters just to get a spot on the offer sheet. On the seller side, what the local data is telling me, that pricing discipline is everything right now. Overpriced homes are sitting, not because buyers are gone, they're not. Volume is up. But because buyers in this environment have the time and the options to walk away from anything that isn't priced right. Sellers who come in at the right number with well-priced homes are still transacting, often within a reasonable time frame. The sellers who are struggling are the ones who are trying to price for 2022. That market is gone. The good news is that you bought prior to 2022, your equity position is likely still very strong, even with the modest price correction. We've seen it. This is an important moment to understand your actual equity number, not just as estimate, not just a number from a website who's never walked through your home. Okay, let's bring all this together and deliver that verdict you came here for. Nationally, home prices are up 1.8% year over year. Colorado is down 2.1% year over year. Days on market are longer, inventory is higher, and yet sales volume in Colorado is actually up 3.2%. This is a rebalancing market. Buyers have more time, more choices, and less pressure than at any point 2020 through 2023. Sellers who price correctly are still transacting. And here's what this is not. This is not 2008. There's no wave of distressed inventory flooding the market. There's no subprime catalyst. There's no structural collapse of the credit system. That is what we have. What we have is a market correcting toward historical norms after an extraordinary run-up driven by post-pandemic era demand and historically low rates. That correction is real. It is measurable and it is healthy. Cooling, not crashing. I want to say that again because it matters. We are cooling or normalizing, not crashing. Now, what do you actually do with this information? If you're a buyer, this is a window worth understanding. You have time that you didn't have for 2 years ago. You have negotiating room that simply didn't exist in 2021. You're not going to catch a crash. The data doesn't support that story, but you are operating in a more buyer-friendly environment than we've seen in years. And the right strategy is to capitalize on that. If you are a seller, your pricing strategy and the preparation of your home matter more right now than at any point in the last 4 years. The era of listing a home at any price, any listing, and watching it sell in a weekend is over. But the market is not over. Buyers are active, transactions are happening. You need a localized strategy built around your actual goals, your actual property, not a generic script based on the last year's playbook. Let's do a fast recap. 5 things. No new information, just the key points locked in. 1, cooling and crashing are not the same thing. Define your terms. You make a decision based on a headline. 2, nationally, the U.S. median home price is $395,000, up 1.8% year over year as of May 2026. The national market is moving toward balance, not collapse. 3, Colorado is underperforming the national trend with prices down 2.1% year over year, but sales volume is up 3.2%. More transactions with softer prices is a cooling market, not a crashing market. 4, Denver Metro and Northern Colorado have their own dynamic. Competitive pockets still exist. Submarket and price point matter more than the state average. Pricing discipline is deciding factor for selling right now. 5, this is not 2008, no structural catalyst, no foreclosure wave. The market is correcting towards historical norms, cooling or normalizing, not crashing. If you made it this far, you're not casually browsing. You're actually doing the work of understanding this market, and I respect that. Here's what I want to offer you. If you're buying or selling in Denver Metro or Northern Colorado and you want a strategy built around your actual goals, not a script, not hype, not a pitch, reach out. Jeremy Kane Homes, call or text me, 303-543-1453. There's no pressure. There's no sales funnel you're walking into. It's a real conversation about what this data means for your specific situation, your neighborhood, your timeline, your equity position, your goals. For buyers, if you want to understand your real negotiating position in this market, I can walk you through that. Sellers, if you're trying to figure out whether now is the right time and what your home is actually worth in this environment, that's exactly the conversation we should be having. If you already own a home in our market and you haven't looked at your equity position recently, that's worth a conversation too. Drop a comment below if this video answered your question or raised a new one. I read every comment and I'll respond, and if you found it useful, hit that subscribe button for me. I put out data-grounded market content for Denver Metro and Northern Colorado on a regular basis. No hype, no fluff, just the numbers and what they actually mean for you. I'll see you on the next one.